Hey there, folks. Today is the 4th of January. Had a few requests for Bitcoin. A lot of you may know what it is, but we're going to cover some basics for you in case some folks do not know, fill in some of the gaps for some people, that kind of thing. Okay, so here we go. Uh, what we're going to cover today regarding Bitcoin is what problems does Bitcoin solve, history of Bitcoin, how to buy it. Well, we're not going to cover much about how to buy it, but about mining it, how it works, the benefits of it, and who invented it, and how to store it. Okay? So, with that in mind, let's get right to it. All right. Bitcoin is an electric peer to peer cash system, according to its anonymous creator, Satoshi Nakamoto. The goal behind Bitcoin's creation was to create a system for electronic transactions without relying on trust. Bitcoin succeeded in this task through a combination of ingenuity, determination, and technological prowess. It's hard to imagine a world without Bitcoin. Today, the world's first and most successful cryptocurrency is a household name. There have been countless TV shows, songs, tributes, artwork, and books dedicated to this revolutionary invention. Despite all this attention, most people in the world remain clueless as to how this protocol works, what gives it value, and why so many people are obsessed with it. At its core, Bitcoin is simplistic. You could even say elegant. This revolutionary program was built upon decades of previous developments in the virtual currency sector to create a decentralized currency that is censorship resistant. What problems does Bitcoin solve? Bitcoin didn't enter the market as just some random chance. It was directly built to combat some of the most pressing issues facing humanity at this time. There's a fundamental core message at the center of Bitcoin. It provides the world with the ability to separate the state from monetary policies. A cryptic message located within the coding of Bitcoin's Genesis block makes the goal of the project clear. Embedded in the Coinbase of this block was the cryptic message, the Times 3rd of January 2009, Chancellor on brink of second bailout for banks. The message itself refers to a headline in the Times published on the same date listed. The creator of Bitcoin believed that bad monetary policy would lead the world into disaster. Perhaps this is why Bitcoin utilizes only sound financial principles to ensure its value and use. Inflation. Bad monetary policy usually leads to runaway inflation. When countries experience inflation, their currencies plummet in value. Inflation can destroy the local economy and cause citizens to be left in a state of crushing debt. Entire life savings are erased in days when inflation gets out of control. Inflation comes about when the amount of currency in the market exceeds the demand. Fiat currency has no maximum supply. Governments and the Federal Reserve can meet up and create new funding as they deem fit. The problem with this approach is that governments are notorious for letting the printers run wild to cover expenses such as infrastructure and wars. Bitcoin doesn't experience runaway inflation because it has a limited supply of only 21 million coins. It's important to know, folks. That's why people are giving you these lofty terms. They're never going to make any more. This capped supply is introduced to the market in regularly timed intervals. In this way, Bitcoin provides the world with a global reserve currency that is far more predictive than the other systems in place. Censorship. Censorship is another important issue that Bitcoin tackles head on. Decentralized networks are historically hard to censor. But for example, think of your favorite video streaming platform. That's another form of a decentralized network. It simply allows you to meet other people online and trade data, regardless of what it is. Bitcoin is similar in many ways. It allows one to meet up and exchange value. All Bitcoin transactions occur in a direct peer to peer process. Since there are no middlemen, regulators, or other parties involved, there is no one to censor your right to spend your crypto as you choose. Transparency. Bitcoin functions on a core protocol of transparency. Public blockchains allow everyone in the network to see every transaction in real time. Not a single Bitcoin moves across the network without people having the ability to track it. This transparency allows Bitcoin to decouple from the other markets in the world. Bitcoin is the first truly decentralized market determined by supply and demand. Privacy. While providing more transparency, Bitcoin is also able to provide more privacy. Bitcoin does away with account names and instead you rely on two keys. The first key is your public key. This is the key that you give people to send your Bitcoin. Um, the second key is your private key. This is how you can send Bitcoin. Never give this key to anyone. If you do, they can take all of your Bitcoin and you can do nothing about it. How does Bitcoin work? Bitcoin succeeded where previous virtual currencies failed because of the introduction of blockchain technology. A blockchain is a decentralized network of computers. This chain of computers leverages the entire computational power of the network to remain secure. Bitcoin transactions get grouped into blocks. These are the blocks that create the chain of transactions, for example, blockchain. Blockchain currencies introduced a timestamp into their equation to make them unalterable. This timestamp is how Satoshi Nakamoto was able to defeat the age-old problem encountered by virtual currencies, double spending. Double spend quagmire. Previous attempts at virtual currencies came very close but ultimately failed because of the double spend problem. The double spend problem was how to stop hackers from spending a cryptocurrency twice during a transaction. In the material world, this isn't a problem. Someone hands you the cash and they don't have it, and you do. In the digital world, hackers can send you a virtual currency, and while the transaction is being processed, resend a similar transaction before the system recognizes the duplication. Nakamoto cleverly added a timestamp to each block of transactions. This timestamp is then used in the cryptographic code in the following block. Mining Bitcoin. Transactions on the Bitcoin blockchain receive approval from nodes, also known as miners. Once the block of transactions receives approval, it gets added to the chain of transactions to form the blockchain. Importantly, miners receive rewards for securing the network. Originally, this reward was set at 50 Bitcoin. These rewards are set to half every 210,000 blocks. On average, this process takes around 4 years. In 2012, the first halving occurred. It brought Bitcoin miner rewards down to 25 Bitcoin. Then in 2016, another one occurred. This left miners receiving 12.5 Bitcoin. The most recent halving was on May 11th of this year, 2020, I should say, and it took rewards down to 6.25 Bitcoin. Analysts predict at this rate the final mining reward will occur sometime in 2140. Why so much power? You often hear people complain that Bitcoin's network is power hungry. The reason that Bitcoin requires so much power has to do with its mining setup. In the proof of work algorithm, only one miner can add the transaction to the blockchain. To determine what node gets this honor, every node competes to solve an advanced mathematical formula. This formula is known as the SHA-256 equation. SHA-256 is an extremely complex equation that requires computers to flex all their processing power. The equation is so difficult that it makes more sense for the computer to generate random guesses rather than attempt the equation directly. Notably, the answer to the equation must start with 4 zeros to be valid. It takes around 10 minutes for this process to complete. Difficulty adjustment. The more congestion on the Bitcoin network, the more difficult the equation becomes. This difficulty adjustment mechanism helps Bitcoin maintain its predictive monetary supply. Due to the introduction of high-end miners, such as ASIC, which stands for Application-Specific Integrated Circuits, Bitcoin mining difficulty has reached new heights. These chips are thousands of times faster than PCs at solving the SHA-256 equation. Keenly, the protocol will require more zeros at the beginning of the answer. This maneuver increases the difficulty of the equation. Benefits of Bitcoin. Bitcoin introduces some amazing benefits to the market. For one, Bitcoin is a safe ecosystem. Your transactions complete in a peer-to-peer fashion. The fewer intermediaries involved, the more cost-efficient and faster the transactions become. This is why Bitcoin is so much cheaper to send internationally than fiat currency. You can send millions in Bitcoin in minutes and for a fraction of the cost of sending the same amount of value in fiat currency. Bitcoin streamlines international payments in a previously unimaginable way. Bitcoin remittance payment centers are a perfect example of how this cryptocurrency has helped benefit the world. Bitcoin is not tied to any government and therefore is not beholden to any sanctions or other restrictions imposed on fiat currencies. People can spend their Bitcoin without politics in mind. The decentralized nature of Bitcoin's blockchain network makes it impossible for governments to shut down. The history of Bitcoin. The official history of Bitcoin begins on August 18, 2008. That's when Satoshi Nakamoto, Bitcoin's anonymous creator, registered the domain bitcoin.org. 2 months later, he published a link to his now famous Bitcoin white paper. The paper was titled Bitcoin, a peer-to-peer electronic cash system, in a cypherpunk mailing list. The cypherpunk community believes that privacy is crucial in today's digital environment. Bitcoin's Genesis block was mined on January 3rd, 2009. This was the start of Bitcoin's blockchain. As such, it's also referred to as Block Zero. Nakamoto also collected a reward of 50 Bitcoins for mining this first block. The same month, the first open source Bitcoin client entered the market via a post on SourceForge. Early transactions. In Bitcoin's early days, the excitement was limited to just the virtual currency development sector. Notably, the well-known computer programmer Hal Finney was the first person to receive a Bitcoin transaction. Hal had been in close contact with Nakamoto throughout the early days of Bitcoin. He received 10 Bitcoins from Nakamoto on January 12, 2009. There are some other first supporters to the project that are still active today in the sector. Day, the creator of Bitcoin predecessor B-Money, was a big part of these early days of testing. Also, Nick Szabo, the creator of another Bitcoin predecessor, BitGold, was one of the first persons to take part in these decentralized transactions. Nakamoto mining and disappearance. Nakamoto was very active in Bitcoin's early days. He communicated often with the aforementioned developers and others in the space. He discussed this concept in various posts that are still up today. During these days, he actively made modifications and posted technical information on the Bitcoin forum as well. He also mined around 1 million Bitcoins, according to expert studies. Then, without warning, he suddenly vanished. In his last post, he discusses some final changes he made to the safe mode feature and leaves a link to the builds. He never states anything about leaving. However, in a post previous to the final one, he states that it would have been nice to get this attention in any other context. WikiLeaks has kicked the hornet's nest and the swarm is headed towards us. Ever since Nakamoto disappeared, developer Gavin Anderson has taken up the role of the lead developer at the Bitcoin Foundation. Pizza Day. On May 22nd, 2012, a Bitcoin enthusiast by the name of Laszlo Hanyecz, hope I pronounced it right, purchased 2 large Papa John's pizzas for 10,000 Bitcoin. That would be over 300,000 today in US dollars. The transaction took place on the Bitcoin forums. In the post, Hanyecz offers 10,000 Bitcoin to whoever will pick up pizzas, pay for them, and deliver them to his house. Hilariously, he states he needs 2 pizzas so he can nibble on some the next day. A British man took up the offer, and within the next hour, Hanyecz was munching on some delicious pizza, and the delivery man was off with his 10,000 Bitcoin. At the time, 10,000 Bitcoin was only worth around $41. Today, these Bitcoin are worth over $100 million. So again, guys, a lot of stuff. So vulnerabilities appear. In early August 2010, an attack vector became evident to the Bitcoin core developers. The coding error caused block verification issues to occur. Hackers could exploit these issues because they allowed users to bypass Bitcoin's economic restrictions. In turn, a hacker could create an infinite number of Bitcoins. Only a few days later, these risks became reality as 184 billion Bitcoins were generated in a single transaction. These newly minted coins were sent to 2 addresses on the network. Luckily, developers were already aware of the vulnerabilities. They choose to reverse the transactions and fork Bitcoin's blockchain over to the updated secure version. At the time, Bitcoin use was still exclusive to developers, so it wasn't the issue it would be today. Critically, this was the only time that a Bitcoin transaction was reversed. No other security flaws have come to light since. Crypto market emerges. The following year saw the introduction of other cryptocurrencies. This was the birth of the crypto market officially. Also, select firms began to accept Bitcoin as payment for services. The very first organization to do so was the Electronic Frontier Foundation. WikiLeaks was also among the first firms to accept Bitcoin donations. In 2012, Bitcoin received its first cameo on a national television series. The cryptocurrency appeared on the CBS legal drama called The Good Wife. This year also saw the Bitcoin Foundation launch. The founders of this group were Gavin Anderson, John Matonis, Patrick Merck, Charlie Schramm, and Peter Vesnes. Their goal was to drive Bitcoin adoption to new heights. To accomplish this task, developers sought to push for more standardization, protection, and promotion of open source protocols in the market. Today, the Bitcoin Foundation still plays a vital role in Bitcoin's expansion. BitPay. In October of 2012, the popular Bitcoin payment processor BitPay celebrated a major milestone. The firm reached 1,000 merchants accepting Bitcoin. The same year, one of the largest hosting platforms in the world, WordPress, started accepting Bitcoin payments. These developments would lead to an amazing next year for Bitcoin. In 2013, Bitcoin made major strides. This was a year that the payment processor Coinbase reported the successful sale of $1 billion of Bitcoin at an average of $22 per coin. It was also the year for Bitcoin's first major market crash. In March, there was a massive sell-off as Bitcoin community split for around 6 hours. 2 Bitcoins. The technical mishap left the world with 2 separate Bitcoin blockchains for hours. The developers made the call to halt all transactions to figure out the problem. This caused investors to lose faith in the fledgling project. A sell-off occurred with Bitcoin shedding value in minutes. Developers were able to stabilize the situation when they had all miners upgrade to version 0.7 as the new standard. Bitcoin regulatory concerns. This was also the year that regulators began to take notice of Bitcoin's activities. Specifically, the Financial Crimes Enforcement Network made a public statement in which it stated that miners selling their Bitcoin rewards for fiat needed to register as money service businesses or face consequences. This announcement caused a slight ripple through the market, but it was just a drop in the bucket of what was to come. In April, Bitcoin experienced a major crash unlike any it had before. The crash was brought on by increased processing delays experienced by the world's largest exchange at the time, Mt. Gox, and the world's premier Bitcoin payment processor, BitInstant. The crash saw Bitcoin's prices free fall from $266 to $76. Confiscations. This year was also the first time a government agency claimed to have seized Bitcoin. Specifically, the U.S. Drug Enforcement Administration listed the seizure of 11.02 Bitcoins in the United States Department of Justice notice. At around the same time, authorities seized multiple accounts related to the Mt. Gox exchange. Regulatory concerns. Bitcoin went through some regulatory issues during the time as well. The Foreign Exchange Administration and Policy Department in Thailand made Bitcoin illegal in the country. Also, U.S. Federal Judge Amos Mazant of the Eastern District of Texas of the Fifth Court made a controversial ruling that Bitcoin is a currency or a form of money. Lastly, Germany's finance ministry acknowledged the cryptocurrency as a financial instrument. Silk Road. In October 2013, the FBI seized roughly 26,000 Bitcoin from the website Silk Road. This was the largest Bitcoin seizure up until that time. The man behind the operation, Ross William Albright, was found guilty of drug trafficking and sentenced to life in prison for his role in the creation of this decentralized marketplace. Many believe this sentence was too harsh and that he was charged as a dealer and not as a marketplace developer. We're getting through this, just about done, guys. Bitcoin ATMs. Bitcoin ATMs began to pop up around the globe at this time also. Robocoin and Bitcoiniacs launched the world's first Bitcoin ATM in October 2013. This historical ATM resides in Vancouver, Canada. The same month, the Chinese internet giant Baidu allowed clients of website security services to pay their invoices using Bitcoins. Also, Bitcoin China overtook the Japan-based Mt. Gox as the largest Bitcoin trading exchange by trade volume in the world. In December, executives from the popular online retailer Overstock.com announced plans to accept Bitcoin in the coming weeks. Shortly after, the market experienced another major loss. This one was brought on partly because the People's Bank of China prohibited Chinese financial institutions from using Bitcoin. At the time, China controlled the majority of Bitcoin's trading volume. Bitcoin comes to Vegas. In 2014, Bitcoin continued along its path to institutional adoption. This year saw both the D Las Vegas Casino Hotel and Golden Gate Hotel and Casino properties in downtown Las Vegas announced they would start accepting the cryptocurrency. This news helped bolster Bitcoin's price. However, the boost was short-lived. In February 2014, Bitcoin experienced a notorious Mt. Gox hacks occurred. The platform saw the loss of 744,000 Bitcoin during the attack. Less than a month later, the world's largest Bitcoin exchange filed for bankruptcy. The market shed value following this revolution. Major achievement. In September, the market started to rebound. This was the month that the Terra Exchange received approval from the CFTC to start offering various Bitcoin-based services. Specifically, the firm began to offer an over-the-counter swap product based on the price of Bitcoin. of 1 Bitcoin, I should say. This occurrence was a monumental achievement for the entire market because it was the first time a U.S. regulatory agency approved a Bitcoin financial product. Bitcoin goes mainstream. The year ended strong for Bitcoin as well. The computer giant Microsoft began to accept Bitcoin from users in December. You can buy Xbox games and Windows software using Bitcoin. Also, the first Bitcoin documentary, The Rise and Rise of Bitcoin, was released. By 2015, the Bitcoin market was starting to gain momentum. In January of that year, Coinbase raised $75 million in seed funding. That year also saw the popular exchange Bitstamp stop trading for a week due to a hack. According to company documents, the firm had 19,000 Bitcoins stolen during the incident. Impressively, the platform reopened and no users lost funds only days later. New heights. The following year saw Bitcoin's network expand to new heights. The network reached a record network rate of over 1 exahash per second. In March 2016, the cabinet of Japan recognized virtual currencies as forms of payment. This helped to push market value and development in the region. Sadly, in August 2016, another major Bitcoin exchange, Bitfinex, was hacked and around 120,000 Bitcoin were lost. Bitcoin is recognized in Japan. 2017 saw Japan pass more Bitcoin-friendly legislation. In this go-around, Bitcoin was officially recognized as a legal payment method. This stance helped to push trading volumes to new heights. The market exploded. For example, between January and May 2017, the exchange Poloniex reported an increase of more than 600,000 active traders, 600% active traders on its platform. Scalability concerns. These record highs led to more investors entering the market. All of these users created an enormous amount of congestion on the network. Soon, Bitcoin transactions were costing more and taking much longer to complete. The problem reached a boiling point when the Bitcoin community split over how to handle the problems. In the end, a new cryptocurrency named Bitcoin Cash emerged. We're going to be doing more on that at a later date in the near future, okay, just so you know. In 2018, South Korea took major action against Bitcoin when it banned anonymous transactions. This year also saw the off-chain payment solution, the Lightning Network, take flight. The Lightning Network relies on private payment channels to prevent Bitcoin market congestion. Bitcoin banking. Bitcoin banking solutions began to enter the market as well this year. This time is when the emergence of Bitcoin debit cards and bank accounts began to gain popularity. Also, Bitcoin ATMs started to spring up in more locations as their prices dropped significantly and more manufacturers entered the sector. By 2019, Bitcoin was already a household name. There were thousands of cryptocurrencies and the market was expanding. Additionally, this is the time that other major crypto projects began to spoke regulators. Specifically, Facebook's Libra coin had regulators on edge. This year, Bitcoin began to mature. You can do nearly anything with Bitcoin nowadays. You can pay taxes, travel, or even buy food or gift cards. Additionally, the expansion of the DeFi sector has provided Bitcoin users with even more options in terms of Bitcoin storage and passive income streams. Who invented Bitcoin? While the name behind the Bitcoin white paper states Satoshi Nakamoto, there has been no one to step forward and prove they are indeed Bitcoin's creator. Numerous individuals have stated they were Nakamoto, but no one has yet been able to move any of those original 1 million Bitcoin mined by the developer in its earliest days. This lack of substantial evidence has led cryptocurrency theories to run a rift. In one particular instance, a computer programmer and early Bitcoiner by the name of Craig Wright came forward claiming that he was Nakamoto. He even attempted to file a copyright on the Bitcoin name. However, when it came time to prove he was Nakamoto, he was able to provide any evidence that linked him to those unmoved million Bitcoins. There have also been instances where someone was mistaken for Nakamoto. Newsweek took a man's life through the ringers after it incorrectly published that he was the creator of Bitcoin. This man, Dorian Nakamoto, denied having anything to do with the project. Today, his face stands as a symbolic image representing Satoshi Nakamoto. We're not going to cover how to buy it. You just look on the exchange, you kind of do that. Now, how to store Bitcoin. Storing your Bitcoin is easy. There are more options available to Bitcoin investors than ever thanks to the popularity of this coin. The easiest way to store Bitcoin is on a mobile app. Mobile apps are easy to navigate and can be downloaded in seconds. Best of all, most are free to use. Mobile Bitcoin wallets such as Jaxx have come a long way since the early days of the market. Today's wallets are easy to use and can store a multitude of different cryptocurrencies. These platforms make it easy for you to diversify your investments and keep track of your portfolio. As I mentioned before, I use AbbaWallet as one of my main wallets that I use. So a lot of different coins continue to be added. So if you want a more secure option than a mobile wallet, you can also go with the Bitcoin desktop client. The desktop wallet is more secure because of your computer is usually more secure than your smartphone. Additionally, since the desktop wallet was developed by the core developers of the project, you know it's a safer option to consider. For those of you that intend to hold large amounts of Bitcoin, or for anyone who believes security is the primary investment concern, a hardware wallet is the best move. Hardware wallets keep Bitcoin stored safely offline. This strategy keeps your crypto away from hackers and other malicious codes. Hardware wallet. Companies such as Ledger offer hardware wallets at affordable rates. These devices are small enough to store anywhere or bring with you. Many provide you with some advanced features, such as the ability to connect your wallet directly to exchanges. A recommendation really would be Ledger Nano X or even the Trezor Model T. The future of Bitcoin looks bright. The world now recognizes the power of blockchain technology. Bitcoin continues to expand both its user base and functionalities. Analysts agree that it's only a matter of time before Bitcoin becomes the world's premier reserve currency. So that's it for Bitcoin, folks. A little explanation for you. I know it was lengthy, but a lot of folks out there seem to need a little bit more information to understand what it is, what it's about. So with that in mind, if you like what you hear, I told you we're going to be posting more information, so make sure you like, share, subscribe, hit that notification bell, as we're going to continue with these type of videos and more, and we're going to be doing some analyst reports more of once we get these foundations built. So with that in mind, everybody, you have a great day. Bye.